One thing you've been saying in recent times, I've heard you say it a number of times, is that not every good idea can be funded. And this actually goes to the area of fiscal discipline. In other words, making certain that you really do look at that spending area inside your budget. There's a second aspect of this also, and that is that right now that budget is in rude health. If I go back to the May accounts from the Department of Finance, they showed that Australia's budget was in surplus in that time. And indeed, over the course of this last financial year, it will be at least $30, maybe $40 billion better off than where it was expected to be. So right now, it's fair to say that the budget's in rude health. It's not necessarily the basket case that maybe many people presume.
Look, there's part of the first part of that question I agree with, Ross, but certainly not the last part of it. I mean, we've got in the budget $1 trillion of debt, as you know, and even with that quite welcome bump that we got from high commodity prices combined with some other elements, which I'll come back to. Even with that, we've still got what will be decades of deficits. And so I wouldn't accept that the budget is in good condition, but I do agree that the budget which finished at the end of June, perhaps the very beginning of this budget year that we're in now, it has been really substantially pumped up by much higher than expected commodity prices, but also the inability to get some of the spending out the door in areas like infrastructure because of this supply chain crunch. And so there has been a lot of revenue from high commodity prices. There has been a lot of spending pushed out of last year into this year and beyond. And that means there will be a dramatic improvement in the budget for last year. That's a good thing in one way, but it still doesn't mean the budget's in good nick. And unfortunately for all of us, particularly perhaps for those of us making decisions about the budget, the things that have been going for us in the budget are not permanent, they're highly temporary, whereas the pressures are more permanent, whether it's those payment pressures or issues around necessary spending on the NDIS or aged care, plus, of course, the cost of servicing the debt itself.
The one thing that is going for you, though, is employment, with 3.5% unemployment rate, with a record participation rate, record numbers of men and women in the workforce right now, and given that the government traditionally has earned around half of its income each year from PAYG taxpayers, I mean, that's the thing that's pumping up the budget along with those commodity prices.
We're very pleased about that. Obviously, that's a very welcome development. Seeing unemployment at around 3.5% is obviously something that we are very welcoming of. It's a very good thing. It's one of the things that we've got going for us in our economy. We've got relatively strong demand. We've got that low unemployment. We've been getting good prices for our commodities until the last few weeks, and all of that is heading in our direction and helping us out in the budget. But unfortunately, we've got much more going the other way, whether it's subsequent waves of COVID, whether it's the consequences of the war in Ukraine, whether it's the China slowdown or fears about the US or the impact of rising interest rates. And that's why in aggregate, the Treasury forecasts I released today have economic growth slowing. That has implications, as you know, for the unemployment rate as well. And these are some of the challenges that we're dealing with and being upfront about.
Treasurer Jim Chalmers, always good to chat to you, and many thanks for your time today.
And you, Ross, all the best.